Hello everyone, welcome to the channel. Here's another educational video for you. Today's topic is liquidity, in my opinion the most important tool in smart money concept. We use liquidity every day on our entries, on our analysis, so that's why it's very important. It's like the basic of the basics on smart money concept. So okay, let's start. First of all, short material with important information and examples, and after that we'll find a few examples on the chart. Okay, so let's start. Liquidity. Liquidity is a certain range on the chart where normal traders hide their stop orders, stop loss, or stop losses. A big player uses them to open his position. He gains allocates positions at the expense of stop losses of other market participants. Suppose a market maker wants to take a position. What does he need to do? Create a zone after which retail traders will put their stop losses, and when the necessary amount of stops liquidity is generated, the big player will come for it. It means that we are always waiting for a big liquidity collection to understand that okay, now liquidity has been collected, so we should look for a reaction or reverse to, for example, to try to catch a trade on other side, because we can see, for example, liquidity on other side. For example, liquidity price collects previously day low, and after that we are looking for the reverse to previously day high. Yeah, because we can see that there is clear liquidity. How will the big player get the crowd to put stop losses where he wants them? Easy. Most people are still trading support and resistance levels, so let the level form on the chart and stops will be placed behind it. It means that, again, we're waiting for liquidity collection because we understand that like most of the liquidity, most of stop losses are always after important liquidity pools. Yeah. And now I will show you like examples where how it works, where, for example, retail traders see the support line or something like that, but we see the liquidity. Like with smart money concept traders, we see the target for the market maker. Okay, so the first example, again, we can see that price, for example, there, like left equal lows. Yeah. So retail traders think, okay, so we can see some kind of long, I don't know how to call it, but we can see support line because yeah, all the time price moves in long, and we can see support line there, support line there. For us, for smart money concept traders, it's liquidity, it's the target for us. We understand that it's a target for market makers, so it's target for us. So what price do? Price collects liquidity from one side there, and after that impulsive move on other side. So liquidity building, market maker creates a zone where retail traders put their stop losses, and after liquidity collection there, for example, when they enter, he just collects all their stop losses, all the liquidity. And after that, again, they think, okay, so we have now broker structure, so they try to find another, no broker structure, but for example, change of the trend. Okay, so now we have, for example, resistance zone, or I don't know, anything else, and put their stop losses there. And again, price goes to collect there, and only after that continues the short. And like all of the time, market maker hunts for the retail traders' stop losses. Another example, kind of long trend, price left equal lows, so retail traders think, okay, we have support zone, or I don't know, double bottom. Now we can enter on long and put stop loss there. Price collects this liquidity, and only after that we can see continuation of the long trend. Liquidity is behind both equal highs, lows, and the usual wick. If there is liquidity, don't worry, the market will come there. So you shouldn't be worried about the liquidity which price left, or if you, for example, see liquidity from the previous months, don't worry about this really. Price always will collect liquidity, but it's a skill where we should understand which liquidity at this moment is valid for the market maker, which exactly liquidity at this moment price wants to collect. Okay, so there is examples of liquidity pools, equal highs, equal lows, compression when we can see, yeah, a lot of equal lows or a lot of equal highs on our side. And there is example of just weeks, yeah, that we have liquidity after this week and after this week. So for example, after liquidity collection of this week, we can aim to the liquidity after this week, or other side, after liquidity collection there, we can look for the reverse to liquidity after this week. Okay, frequently asked question, why would a big player be interested in taking people's stop losses? This is how a big player builds up his position. He needs to, put on his position a lot of money. It's not like, $100 or $1,000 or 10,000. It's like billions of dollars. He can't just put on one moment on the market billions of dollars, yeah, because it will be the disbalance on the chart. It's like impossible thing. So he needs to create the zones, after then collect these zones like liquidity, and like all of the time puts, I don't know, $1 million, million, 10 millions, 20 million, yeah, when he can. So that's how it works. What are sell side liquidity and buy side liquidity? Sell side liquidity stops for longs. Buy side liquidity stops of those who open short. So sell side liquidity, it stops who open the long, yeah, but then, for example, price collected SSL liquidity, it means that price collects retail traders who open the long. When price collects BSL, it means that price collected retail traders who opened trades on short. There is a perfect example after liquidity collection of short stop losses, yeah, so buy side liquidity, price collect sell side liquidity, and only after that continuation of the long. Yeah, because they think, okay, we have support line, so we can put our stop loss there, price collected. Then they think about the short because there is some kind of support line, and again, continuation of the long. The same there. They think it's a support line, but it's just like clear compression. Put their stop losses there, price collect this, then short, then again after liquidity collection of sell side liquidity, finally we see the continuation of the long trend. Will there be liquidity behind the pool that the price has not taken off for several reals? When the price starts to approach the liquidity pool, the crowd will already start leaving their order stop losses there. So always we can see, for example, why Bitcoin didn't achieve all-time high, for example, like last all-time high. Bitcoin just, the market maker just built the liquidity, before the all-time high, and where everyone were we're confident about the correction or start of the short because Bitcoin collects all-time high. They put their stop losses after all-time high because again, okay, we have, for example, support line there, so we can open the short and price after price. The market maker build enough liquidity, then finally we got our long and collection of all-time high. What should we expect from the price when it has taken the liquidity pool? It is worth paying attention to the reaction. As always, like we should wait for the new information after price collected important liquidity pool. We should wait for the reaction. After liquidity pool, price could ignore it, price could make a correction, price could make a reverse. So we can't know exactly what will happen. So we should wait for that reaction. The price may not notice this pull and go further, or it may aggressively turn around after a major player has gained or unloaded the position. Yeah, because of course on important liquidity pools, market maker could unload the part of the trade. And after that again, correction to collect again this position, and then again after only correction, continuation of the trend. Yeah. Okay, so I hope it's clear. So now training the chart. And yeah, about the Bitcoin, because I wanted to show you the example. Just look. It's clear liquidity building. Like for me, like for smart money traders, for guys from our community, it was clear that finally Bitcoin will achieve all-time high. Why? Because we can see clear liquidity pool. This short, it's clear correction, it's clear liquidity pool, but retail traders think, okay, so we have resistance line or support line. Sorry, I don't know. And okay, so we can put stop loss, for example, there because we can find a short trend. Yeah. So they put after like market maker build enough liquidity to collect this. He can see enough liquidity there. Only after that, finally, after major liquidity there and there, finally, we got our long trend and very impulsive. Just compare the moves. I think long was more impulsive than this short correction. So it's just again an example. Okay, other example I want to show you on the chart. Okay, so we can see that, for example, short resistance line or something like that. So, okay, they can see the last point of the resistance line, or I don't know how to call it. This one, yeah. So they put their stop losses and expected they expect continuation of the short trend. What market maker needs to do? Needs to collect the stop losses, builds the liquidity there, for example, to make other retail traders open long trades, put their stop losses after, for example, this compression. Price collects again buy side liquidity and then go to the sell side liquidity. And like it works on the same way on the charts. Doesn't matter which market, indices, forex, crypto, it works on the same way on every market and on every chart. You can find a lot of examples of it. Okay, so it's all. I hope it was useful for you. Thank you for watching and see you on another educational video.